वेलकम टू वेब क्लास। वेब क्लास में आपका स्वागत है। वी आर इनटू ट्रेनिंग एंड डेवलपमेंट ऑफ सॉफ्टवेयर फॉर म्यूचुअल फंड डिस्ट्रीब्यूटर्स। आज ट्रेनिंग के बारे में बात करना है। वेलकम बैक। टुडे वी शैल बी डिस्कसिंग अबाउट डिफरेंट टाइप ऑफ रिस्क दैट we are exposed to in the field of finance and investments. Now, why this topic is so important? The importance of this topic is not about its content. It's more because the two examination that actually where you have to give a lot of stress onto the risk side. One is CFA, and if any one of us is doing CFA, or if anybody is doing say PMS examination, that is NISM 21 module. For these two examination, the risk is very, very important. Different types of risk, definitions of risk, how they are to be explained, what are the measurement of that. At least the early part of comprehensive understanding on risk is desired for these two examination. In fact, this is also useful if you are giving examination of NISM 15, which is basically equity research. Not all the risk that we will be dealing with, but some risk is of course very, very important for NISM 15 also. And recently we have introduced one examination NISM 13 also. That's a common derivative. Common derivative is for SIF product. No, SIF product is coming from mutual fund industry very soon. So you can see CFA examination, PMS for entry for PMS and entry for SIF and all. So for these all area, the risk, different types of risk, different types of risk, and the definitions, its applications, its measurement, that is what is required. Now we shall be covering about the basics of all the risk definitions. And we will be keeping a separate program for CFA level where we have to do a lot of numericals. So what makes this CFA different than the other examination in terms of this understanding is the questions on the numericals. Lot of numerical questions are there. So that we shall be keeping separately. We will be doing this later on. Fine. So let us start with the risk, different types of risk. Now let me list it out. I will make two or say possibly three small videos on that, and then followed by that numericals for all the risk. Now different types of risk. So to get into the different types of risk, let us make it little simple for us to understand. Different classification is very, very important. Let us say equity is one asset class, so we'll have a certain kind of risk. You can say debt is also a separate asset class, will certainly have a certain kind of risks. Similarly, we can have a currency, we can have a commodity. These all have a different types of risk. And other than that, of course, we have a different kind of platforms, different kind of operations, and related to that, we have also some other kinds of risk. Let us see one by one. First of all, different types of risk related with the equity. Now you see, in equity, the most important, in fact, those who are the student of an NISM 5A module, that's a mutual fund module, they know this very simple, the total risk, and that is basically equal to systematic risk and unsystematic risk. This is very, very oft repeated and most common that everybody is expected to know about the risk that we are exposed to the equity. Now I will come to this in definition one by one. Let me give first all the risk name as such. So equity, you can go with the three risks. That is good enough for you to start your preparation. If you come to the debt has got a little more number of risk. Why? Because it's easy to measure the risk in the debt. Not so easy to measure the risk in the equity. That's very interesting thing is that whatever you want to do in terms of equity, the measurement of parameters of equity is always little more difficult. What is the reason behind that? Reason behind that is that equity is perpetual in nature. The moment this becomes perpetual in nature, every parameters becomes very difficult to be identified, very difficult to be measured. But debt is not perpetual in nature. Debt has got a time frame. It is a maturity. It has a tenor. So debt has a tenor. Therefore, the risk here is a little easier to measure. And so many risks you can measure. The most important, if I start with credit risk, this is the most popular risk that is associated with the credit risk, and that is what it is in all. We will discuss this later on. The second most important is the interest rate risk. In fact, this interest rate risk at times, this also takes precedence over credit risk. Yes, this is a very, very important risk with which we have to understand this. Now, you can say with credit risks, two more risks are attached. One is called downgrade risk and the other is called default risk. You can also say along with the downgrade, I could have said also upgrade risk. Yeah, possible, why not? If the bond can gets downgraded, then bond can gets upgraded also. And for me and for any student of finance, any kind of uncertainty is a risk. That's simple. Any kind of uncertainty is a risk. So if downgrading can be a risk because that leads to the change in the bond price. No, if downgrading happens, that leads to the change in the bond price. I will explain this little later. So similarly, upgrading can also happen and that can also lead to the change in the price. Fine. So downgrading, upgrading both could be a risk. Let us, for our convenience portion, let me write only downgrade risk. Fine. So downgrade risk is there, default risk is there. Then after interest rate risk, very important risk is the reinvestment risk. This reinvestment risk, this brings a very beautiful concept on the debt market that is called bond immunization. Reinvestment risk, I am writing here, reinvestment risk. Very powerful concept that is called bond immunization. And bond have a tendency to immune its performance with respect to the two different kind of risk. Of course, interest rate risk and reinvestment risk is considered. We will discuss this a little later. That's also very important risk. And then we have something called yield curve risk. This yield curve risk is a risk associated with the different type of yield that we can think of when we are plotting the yield curve. So yield curve risk. So let me write here yield curve. Yield curve risk. So you can say these 6 are good enough for you to understand all the aspect of the debt risk. Equity risk 3 is good enough. Debt 6 is 3 plus 3. Yeah, 6 is good enough for you. Currency risk, exchange rate risk. That's very simple. So exchange rate risk. This explains you almost everything. Fine. So this is the 7th risk. 6 plus 1 7 and 7 plus 3 10. Other than that, if you have to identify 2 more risks which is equally prominent, then one I will always say is the counterparty risk. This risk is associated with when you are going for trade on the exchange. So when you are trading on exchange, then a counterparty risk could have surfaced. I am saying could have surfaced, but that is handled by the clearing corporations, and the process for that is called novation. Very important concept for anyone who is trading in the capital market, who is trading on the stock exchange. So this counterparty risk, this of course is negated. This is control taken care of that. And the other one along with that is the basis risk. Basis risk is all the risk that we know about derivatives. Derivatives is always have basis risk. So total we have now 12 risks that we know. 3 risks here, 6 risks here, and 1 risk here, and 2 risks here. So total we have a 12 risks. That is what we need to know. Minimum. I say minimum. So you will say, is this the end? No, this is not the end. If I remove these 12 and I put another say 4 5 more risks. So the first risk that comes is the finance risk. Finance risk is something, whenever you have a debt in your balance sheet, whenever you have a debt in the balance sheet, what is called leverage position, what is called gearing. So if you have a debt in your in the balance sheet, then finance risk will automatically come. So this is very important for any kind of equity research program. For any kind of equity research program, you need to have a complete understanding on the finance risk. Very important. Fine. And then other than that, the routine risks are like, you will say, inflation risk. This is of course attached with all kind of investment that we can think of. Liquidity risk, this is always attached with all kind of risk that you can think of. Always, this is always attached with all kind of risk that you can think of. Fine. The regulators' risk is always there, because the regulators are there, they can take certain decisions that may be good and may not be good in the interest of you and in your business, but that is okay. But regulator has to do his own part, so this is also a kind of uncertainty in the finance, in the field of finance and investment. So this is also very important. And last but not the least, will the business risk, the business in which you are associated with, that is also important. I will say one risk is the promoter or developer. Promoter, you can say the business owners risk. So you can say promoters risk. Let us say promoters risk. Like that. This is what risk. So we had 12 in the last page, and then we have a 1, 2, 3, 4, 5 and 6. So plus 6. So total 18 types of risk. No. So this in fact explains you all the things that you are required to know about different aspects of risk. And incidentally, this covers almost all the aspects. If you go for the CFA program, not more is required to be known more than these 18 risks. This covers all things. Of course, you have a more numericals here. You have a lot of numericals here. That's a fine. But concept wise, definition wise is something, this is good enough for you to identify. Fine. Then you can say, if I go for say PMS program of NISM 21 module. This I explained in the beginning also. This is all these risks are required for you to be understood, which is very important. And if you are preparing for SIF preparation, SIF product of a mutual fund, that is NISM 13. So there also it is quite handy for you. NISM 15. Equity research module, this is also quite equity research, very important, very important. Everybody should clear this examination. So these are the examinations very important from the any professional point of view if you want to upgrade in the career. So these are the total risks that you are supposed to know. Now let me go to the next slide for you to explain first equity risk and then the debt risk precisely. Good. You can visit us at our website WebClass.in or at our research website research.webclass.in. You will get a lot to know about mutual fund schemes research. We also develop mutual fund distributors websites, and you can see it on mfd.webclass.in. You can write to us at my mail id sanatbharadwaj@gmail.com. You can also write at services@webclass.in. My number is 8910492919.